Imagine this. It's 2026 and you're driving in California, but it's not like you remember. Gas prices are sky high, tolls are everywhere, and new laws make your daily commute feel like a financial trap. What if I told you that the cost of driving could rise faster than you think? From expensive EVs to road pricing, there's so much you need to know before it's too late. Stick around for the next few minutes, and I'll reveal the 10 shocking reasons driving in California could become a financial nightmare for many. You won't want to miss this. Number 1. Rising gas prices despite policy changes. California is notorious for its high gas prices, and unfortunately, this trend will likely continue into 2026. Despite the state's aggressive push for electric vehicles, EVs, and greener transportation options, gas-powered cars aren't disappearing anytime soon. This means that gas prices will remain a major burden for millions of California drivers. The state's high demand for fuel, coupled with its reliance on imported oil and limited refineries, keeps prices inflated. And while California does have ambitious goals to reduce its carbon footprint, the road ahead may not lead to cheaper fuel. In fact, prices are likely to climb, even as alternative energy sources are prioritized. This is because California is facing a mix of high taxes on fuel, environmental regulations, and increased global oil demand. With more restrictions on oil drilling within the state, supply shortages could become even more common, causing a ripple effect on prices. Research shows that areas with higher gas taxes, like California, tend to see larger price hikes compared to the national average. The expected shortage of refineries and difficulties in maintaining infrastructure only make things worse. But it's not just about the price at the pump. Fuel efficiency will become a crucial factor for anyone still relying on traditional vehicles. With rising costs, many drivers will have to make tough choices, whether to downgrade their car, use public transport, or even carpool more often. It's important to note that this issue will hit low-income families the hardest, who may not have the luxury to switch to more fuel-efficient vehicles or adopt EVs. As gas prices rise, even everyday errands could cost more than most Californians are prepared for. Stay ahead of the curve. Start budgeting for rising fuel costs today. Consider exploring fuel-efficient vehicles or even switching to an electric vehicle if you're in a position to do so. As gas prices soar, it's better to be prepared for these inevitable changes. Number 2. Introduction of congestion pricing. As California cities continue to grow, the traffic problem is only getting worse. To tackle this, major urban areas like Los Angeles and San Francisco are considering congestion pricing, charging drivers a fee to enter heavily trafficked zones. This means that every time you drive into popular areas, you'll have to pay a fee. While the goal is to reduce traffic congestion and air pollution, it's also going to create another financial burden for commuters. Congestion pricing could be a game changer, particularly in densely populated urban areas, but the costs might surprise you. This system isn't just about making money, it's about sustainability. By charging drivers for using busy streets, California hopes to encourage people to choose public transportation, carpool, or even bike in areas where traffic is typically unbearable. The fee structure will vary depending on the time of day and how congested the area is. During peak hours, like rush hour, expect the highest fees. This could easily add 10, 20, or more to your daily commute, depending on where and when you're driving. For people who rely on their cars to get to work or run errands, these charges can add up quickly. What's worse, it's not just city dwellers who will feel the effects. Suburban drivers, who currently don't pay as much for their commutes, will also see an increase in overall driving costs. The new system is designed to be automatic. You'll pay through electronic tolling, so you won't even have to stop at a booth. This can feel like a hidden fee, creeping up on people who may not have budgeted for it. For lower-income drivers, this may mean having to rethink their daily routes, avoid specific areas, or look for more affordable transportation alternatives. As congestion pricing becomes reality, it's essential to plan ahead, adjust your travel habits, and budget for new fees that will soon be a part of California's landscape. Number 3. Increased tolls on highways and bridges. California's infrastructure needs constant maintenance, and drivers will soon be asked to pay more for it. Over the next few years, expect a sharp increase in toll prices on highways and bridges, especially in high-traffic areas. Tolls have already been a way to fund road repairs and upgrades, but as maintenance costs continue to rise, tolls will inevitably follow suit. This will impact commuters who depend on California's extensive network of highways and bridges to get to work, school, and run daily errands. In particular, major thoroughfares like the Golden Gate Bridge and the San Francisco Bay Bridge will see regular toll hikes as state and local governments struggle to fund the rising costs of bridge maintenance and improvements. With the push to expand California's highway system, funding these ambitious projects will mean higher tolls. The state's budget is already stretched thin, and toll revenue is crucial to maintaining and improving its road infrastructure. This increase in toll fees will be particularly noticeable for drivers who cross these bridges on a daily basis, as even small fee hikes can add up quickly. Additionally, expect new toll roads to pop up in areas that were previously toll-free. Expanded toll lanes are being considered to ease congestion, but they'll come with a price. If you regularly take these routes, your commute could become significantly more expensive. While some argue that tolls will help reduce traffic congestion, they can also make daily driving unaffordable for many. People who can't afford these extra costs may have to rethink their commuting patterns, whether that means driving longer distances on free roads, considering public transportation, or even relocating. Planning ahead will be key. Drivers should start setting aside extra funds for toll expenses and be prepared for new fees popping up on routes they've never had to pay for before. The cost of getting around California is only going to increase in the coming years, so the more you prepare, the better you'll be able to handle the financial burden. Number 4. Autonomous cars and the shift in insurance. The rise of autonomous vehicles in California is going to revolutionize the way we drive, but it's also going to significantly impact the cost of driving. While the idea of self-driving cars sounds futuristic and convenient, the financial implications are very real. The transition to autonomous cars will not only change how we navigate the roads, but also how we insure our vehicles. As self-driving technology becomes more widespread, insurance premiums are expected to rise dramatically for some. This is because liability in accidents will be more complicated when a car is driving itself. Currently, the liability in accidents is clear. The driver is usually at fault. However, in the case of autonomous vehicles, who is responsible if the car malfunctions? Manufacturers or software developers may be held accountable, but it's likely that insurance companies will increase premiums to cover these new risks. Autonomous cars are equipped with complex systems that, while reducing human error, introduce new possibilities for technical malfunctions or software failures that could lead to accidents. Insurance companies will need to adjust their policies to account for these uncertainties. Moreover, with the rapid shift towards autonomous technology, there will likely be legal battles over who is liable in the event of an accident. This complexity could lead to an increase in insurance claims and higher administrative costs for insurers, which they'll pass on to consumers. For drivers of autonomous vehicles, this means higher premiums, at least in the short term, as the industry adjusts to new laws and standards. Even if you're not in an autonomous vehicle, there could be spillover effects on traditional vehicle insurance as companies change their pricing models to account for the shift in technology. What can you do? Be proactive in reviewing your car insurance policies, especially if you're considering an autonomous vehicle in the future. Research how companies are adjusting their rates and policies to prepare for this coming shift. Number 5. Gas vehicle bans and limited options. By 2035, California is set to ban the sale of new gas-powered vehicles. While this is part of the state's effort to tackle climate change and reduce emissions, it's going to have a significant impact on the cost of driving. As more people make the transition to electric vehicles, EVs, the demand for gas-powered cars will decline. This could drive up prices for those who are still holding on to their gas-powered vehicles, especially as fewer new models are available and used gas cars become rarer. In addition, with fewer manufacturers producing traditional vehicles, repair costs for gas cars will likely increase as well.
Spare parts for older models will become harder to find, and labor costs for repairs could go up as mechanics shift their focus toward electric cars. For those who rely on their gas-powered cars, this can be an added financial strain, especially if you're not ready to switch to an EV yet. The reality is that for many, electric cars won't be affordable options, especially in 2026. While prices for EVs are falling, they still remain higher than gas-powered vehicles, and many lower-income drivers might struggle to make the switch. This also includes the cost of charging infrastructure, such as home chargers or access to public charging stations, which could add to the total cost of owning an EV. Even with state incentives for electric car purchases, these vehicles are still out of reach for many families, especially those in rural or lower-income areas where EV infrastructure is limited. For those who are unable or unwilling to transition to an electric car, maintenance of older gas vehicles will become even more important. Keeping your car in good condition could help extend its life as long as possible. But with the looming ban, your options for replacement will become limited, and prices for gas vehicles could soar in the second-hand market.
Number 6. Road maintenance and repair fees. California's roads are constantly under pressure from heavy traffic, weather conditions, and the natural wear and tear that comes with time. As a result, maintaining and upgrading the state's infrastructure is a costly, ongoing task. In the coming years, drivers will see new fees introduced to help cover the increasing costs of road maintenance and repairs. This will be particularly noticeable for frequent commuters who rely on California's extensive highway system. Instead of relying solely on gas taxes or toll increases, local and state governments are exploring additional road maintenance fees to ensure that the infrastructure can keep up with the demands of a growing population. These fees could take various forms, such as annual vehicle assessments, usage-based tolls, or even a per-mile fee that charges drivers based on the distance they travel on public roads. With California's roads in constant need of repair due to traffic congestion, earthquakes, and regular wear, these fees are set to become a major part of the financial landscape for drivers. For drivers who use the roads regularly, these additional charges could significantly add up, increasing the overall cost of driving in the state. What's more, the burden of road repairs isn't only on vehicles that cause damage, it's a cost that every driver shares. Heavy-duty trucks, often responsible for much of the road deterioration, will face higher charges, but everyday drivers will feel the squeeze too. It's expected that low-income and frequent drivers will be disproportionately affected by these new fees, as they rely on cars to commute to work, school, or run errands. Urban areas with older roads are likely to see the highest fees, while rural areas might face a slower implementation, but it's inevitable that all drivers will be impacted by this push for infrastructure funding. To stay ahead of the curve, it's essential for drivers to budget for these additional fees and consider alternative modes of transportation, such as public transit or ride-sharing, to reduce personal costs. As California continues to prioritize road upgrades, the more informed you are, the better prepared you'll be for these upcoming expenses. Number 7. Environmental regulations and fees. California has long been a pioneer when it comes to environmental regulations, and as the state pushes further toward a greener future, drivers are likely to face even more stringent rules and fees. By 2026, new emission standards will likely tighten, making it more expensive to maintain and drive older, less environmentally friendly vehicles. As part of the state's climate action plan, stricter laws will be enforced to reduce air pollution and combat climate change. This will force car owners, especially those with older vehicles, to either upgrade to cleaner models or face mounting costs in fees and fines. For instance, low-emission zones are becoming a reality in several major cities, where vehicles that don't meet certain emission standards will be required to pay a penalty fee for entering those areas. Cities like Los Angeles and San Francisco are expected to implement these zones within the next few years, making it more expensive to operate a gas-powered car in high-traffic areas. While these fees are meant to encourage the switch to electric or hybrid vehicles, the burden will fall heavily on those who can't afford to upgrade to newer, more eco-friendly models. The cost of vehicle upgrades won't be the only expense. As the state's environmental goals become more ambitious, the cost of emissions testing could increase as well.
Drivers will need to pay for regular inspections to ensure their vehicles meet increasingly rigorous environmental standards. For many, these tests will be an added cost of ownership, especially for those who plan to keep their gas-powered cars longer. On top of this, as more and more cars are pushed out of the market due to emission bans, used car prices for clean, well-maintained models will rise, making it even harder for people to buy into the green revolution. To avoid the financial squeeze, it's essential to keep an eye on emissions regulations and consider switching to a more environmentally friendly vehicle early on. Planning for these changes now will help you avoid unexpected fees and make the transition to a greener driving future smoother.
Number 8. Inflation and cost of living. The rising cost of living in California is an undeniable trend, and it's expected to directly impact the cost of driving by 2026. As inflation continues to affect everyday goods and services, the price of everything tied to vehicle ownership, fuel, insurance, maintenance, and parts is also going to rise. The combination of higher housing costs, soaring food prices, and wage stagnation means that drivers will feel the pinch across all areas of life. The transportation costs will be particularly hard to bear. For many, the car has become a necessity, but this necessity is becoming increasingly expensive to maintain. One of the main drivers of rising car costs will be the price of car parts and repairs. As inflation impacts the cost of manufacturing, expect a surge in repair bills and parts prices, particularly for older vehicles that require more frequent maintenance. Mechanics and auto shops will also be dealing with higher labor costs, which they'll pass down to consumers. These expenses can quickly add up, especially if you're dealing with an older vehicle or one that requires specialized parts. For those already living paycheck to paycheck, keeping a car running in California might become unsustainable. Beyond maintenance, insurance premiums are likely to rise as well. Inflation increases the overall cost of doing business, and insurance companies are no exception. Higher claims payouts, increased repair costs, and a larger number of vehicles on the road can drive up premiums. For many drivers, especially those in urban areas, insurance will become one of the largest ongoing expenses associated with car ownership. Budgeting for this future will be essential. As living costs rise, you may need to reconsider how much you're spending on your car, whether it's downgrading to a more fuel-efficient model or exploring alternative transportation options like public transit or carpooling. By planning ahead, you can better manage the financial strain of California's rising transportation costs and avoid being caught off guard when these changes hit.
Number 9. Increased public transportation demand and costs. As driving becomes more expensive in California, many residents will inevitably turn to public transportation as a more affordable alternative. However, this shift will bring its own set of financial challenges. As demand for buses, light rail, and subways increases, local governments may raise fares to keep up with growing operational costs. These price hikes could make public transit an expensive option for many commuters who are trying to avoid the rising costs of car ownership. In addition to fare increases, public transportation systems will require continued investment in infrastructure to meet the demand of an increasing population. This means higher taxes and new fees levied on residents to fund expansion projects and upgrades to existing systems. For example, the cost of subway or bus extensions could be passed down to taxpayers and passengers through higher service fees. Another consideration is the availability and accessibility of public transportation. Not all parts of California have reliable or accessible transit options. Rural areas, in particular, are often left behind in terms of public transportation infrastructure, which means those who live outside urban centers may be forced to continue relying on personal vehicles. The lack of affordable transit options in these areas will force many residents to choose between expensive driving costs and long commutes. For those relying on public transit, it's essential to prepare for fare hikes and potential service disruptions as these systems adapt to increased demand.
In cities like Los Angeles, Muni in San Francisco, and others, rising transit costs will likely become a regular feature of life. Planning ahead for these increases while exploring other carpooling or rideshare alternatives will be crucial to managing transportation costs as the landscape changes. As California moves toward a future where driving becomes financially burdensome, you'll need to weigh the pros and cons of public transportation. While it may seem like the affordable option, it's clear that the costs associated with it are on the rise as well.
Number 10. The impact of autonomous vehicles on traffic and costs. Autonomous vehicles, or self-driving cars, are rapidly becoming a part of California's transportation future. While these vehicles promise greater convenience and reduced accidents, they also introduce new financial challenges for drivers. The initial cost of purchasing an autonomous vehicle is expected to be higher than traditional cars due to the sophisticated technology involved. Even as prices drop over time, the adoption of self-driving cars could create new market pressures that make it financially difficult for many drivers to switch. In addition to the high upfront costs, autonomous cars will require new infrastructure investments in roads, traffic signals, and parking systems. These investments will need to be funded, and likely the costs will be passed on to consumers. Local governments may implement new taxes or fees to support the development of this infrastructure, meaning that even drivers who don't own autonomous vehicles could feel the economic impact. As the state works to accommodate these new vehicles, expect the introduction of additional regulations and maintenance fees that will also add to the overall cost of transportation. Furthermore, the widespread adoption of autonomous vehicles could lead to increased demand for road usage, especially in urban areas. More vehicles on the road, whether autonomous or traditional, could mean higher congestion and a subsequent rise in road tolls or congestion pricing. While autonomous vehicles are designed to reduce accidents and improve traffic flow, the increase in vehicle volume might result in more traffic jams and delays, potentially negating some of the efficiency gains that autonomous driving is expected to bring. For those looking to adopt autonomous technology, it's essential to stay aware of these costs. Insurance premiums for self-driving cars could also rise, as the legal and liability aspects are still being worked out. In the long run, these vehicles may provide convenience, but they'll also bring a new set of financial considerations that could impact your overall budget. The key takeaway? As California embraces autonomous vehicles, drivers must anticipate higher initial costs, the need for infrastructure investments, and the potential for increased road usage fees.
As we've seen, the cost of driving in California after 2026 is shaping up to be a financial challenge for many. From rising gas prices and tolls to the introduction of congestion pricing and autonomous vehicle regulations, the landscape of transportation is rapidly changing. These shifts in policies and the economy will hit commuters hard, especially those already struggling with the high cost of living. With increased fees for road maintenance, insurance premiums, and public transportation costs, the financial burden will continue to climb. Even the switch to electric and autonomous vehicles, while necessary for the environment, comes with its own set of financial hurdles. For many, the dream of affordable driving may seem increasingly out of reach, but understanding these challenges early is key to preparing financially. Whether it's budgeting for higher tolls, considering electric vehicle incentives, or exploring alternative transportation methods, being proactive can help you manage the future costs of California's roadways. The time to plan is now, and staying informed will give you the upper hand when the changes inevitably come. If you found this video valuable, we'd love to hear your thoughts. Drop a comment below and share how you're preparing for the future of driving in California. Don't forget to check out our previous video for more tips on navigating the changing transportation landscape. We put a lot of effort into creating these videos, so please support us. Just one click to subscribe and stay updated on all our future content.